In this presentation, we are going to enter a transaction into our comprehensive problem related to the purchase of equipment. For more accounting information and accounting courses, visit our website at accountinginstruction.info. The data is going to be here. We're going to enter that into our general journal, post it to the general ledger, see the effect on the trial balance. So we're here in B13. That's where we're going to put the date of 1/2. It'll format for us because the cell has been nicely pre-formatted for us, which is nice. Then we're going to say we bought equipment for cash. So we bought equipment for cash. Our question then, is cash affected? It is. It's going to be going down. So we're going to do the opposite thing to it, which in this case is a credit. So this is a debit represented by not having brackets. We're going to do the opposite thing to it, a credit, to make it go down. So we're going to copy the cash. I'm going to put that on the bottom of the date. So we're going to put the credit on the bottom. So we're in cell C14. C14 is right here. We're going to right click and paste 1, 2, 3. I'm going to increase the indenting, which is probably done for you already. If you can't do it this way, you can double click on it and hit the space bar like this, 1, 2, 3. I'm going to undo that, and I'm going to do it by going to the Home tab, Alignment, and Increase Indenting. So it's a nice function to know about. And then we're going to go in the credit side, and we're going to be purchasing it for $40,000. I'm going to do that with a negative $40,000 in the credit side, representing the credits with a negative number. We are then in cell D13. I want to put the positive $40,000 here. I'm going to do that by a little formula by saying negative of that number, taking that number, flipping the sign of it, and putting the positive $40,000 there. Then we're just going to put this account that we got. What did we get? Equipment. Now, if you look in the trial balance, of course, the equipment is not in the income statement. It's not equipment expense. Why? Because we are not going to consume it at the point of purchase in order to help generate revenue. It's going to be there for a long period of time and therefore goes on the books as a type of investment, a type of asset, which we will then use and allocate the cost for over the life of that equipment. So in L10, we're going to right click and copy. We're going to put that up top in C13, right click and paste, 1, 2, 3. So there we have it. Now we're just going to post this out. So here's the equipment. Here it is on the trial balance. And we're going to find that same information on the general ledger. Now I'm going to try to freeze the panes in order to practice freezing the panes here. So to do that, I want to go to the left just a little bit, or to the right just a little bit. I'm going to scroll to the right with this button so that B is flush with the end of the cell here. Then I'm going to go all the way to the top, and I want to put my cursor in F1. And then I want to freeze the panes. We want to freeze the panes so that cells or rows or columns B through E do not move as we scroll to the right. So to do that, we're going to go to the View tab up top. We're going to go to the Windows group. We're going to go to the Freeze Panes, and we will select Freeze Panes. So now when we go right, those windows stay there, which is nice. So now we're going to go back to the left. We want to find the equipment. Here it is on the trial balance. So it's 1, 2, 3, 4, 5 accounts down. Same for the general ledger. Cash, accounts receivable, supplies, some other asset. And then here's the equipment in W10. So we are in cell W10. W10. Then we're just going to say equals. I'm going to use the mouse to point to that 40,000. Remember, we always want to use formulas here, or it'll make it easier. You don't have to. You can put it in 40,000, just type it in there. But if there's a problem, it will be harder to figure it out. So we got the 40,000, bringing the 20 up by 40, 260. That 60 then will be linked. And note, why is this nice? Because you can find where that came from by using these functions. You may not be able to use this function if it's frozen, but just note I can tell where what's coming from, and if there's a problem, that's really helpful to figure out. So I'm going to undo that. We're going to say here's the 60,000. I'm going to put my cursor right to the left of these frozen panes and scroll to the right, and there the 40,000 is now included here. That 60,000 being made up of this 20,000 and this 40,000. I'm holding down Control, so I'm highlighting those non-adjacent cells, and here's the 60,000. So Excel adds it up for us, so we don't have to think at all. It's great. Okay, so then the next thing that we have here is we got the equipment and the cash. So here's cash. Here's cash up top, first account. So we want to be on the credit side for cash. I'm just going to go to the next cell. So I'm in cell P10, where we will say equals and point to that 40,000. It's going to bring the 80,000 down by 40,000, doing the opposite thing to it, to 40,000. And that, of course, is what now will be on the trial balance. So if we scroll back down, we can see the effect on the trial balance. The debits and credits are now in balance, indicated by the debits minus the credits equaling 0. We got the books increased by the equipment. Notice what did not happen. We did not decrease or have any effect on the income statement. Nothing has happened to the income statement thus far. Revenue minus expenses is 0. You might say, well, why is that? We bought the equipment in order to help us, run the business. Because we haven't used it yet. We haven't consumed it. The equipment has not. It's just sitting on the books. Theoretically, we could sell it right now for $60,000. And obviously, we can't because you wouldn't be able. But theoretically, you could sell it for the $60,000. You'd be okay. Once we start consuming it, then we're going to allocate that cost as we do, as it's being consumed in the format of depreciation.